Now we're going to move on to our first panel session of the day. So if there are any people who would like to be panelists around in the audience. Daria, you're not busy at the moment. Could you come up? Are there a few other people that could come up and join here? Okay, so how about Paul from Barclaycard? He was here. Yeah, Paul, could you come and Daria, and maybe there's a couple of... Rahul, could you come and fill in and just... There are a couple of other people that want to come up and join us. Here we go. That's great stuff. Wait a minute, we're still missing a couple. Oh, are you busy? No, you can come and join in as well. So that's like Amazon people do. Okay, come and take a seat. Right, good. Excellent, come and take a seat. Have we got enough for a panel? Yes, I think this will be good. Okay, great. Cool. Hi, I'm Dave.
Hi.
Hey, how's it going?
Hi.
I'm Dave. Hi. Okay, take a seat. Get comfortable. Come on. Right. I think we should probably take a minute or two just to explain to everybody who you are, because otherwise they'll wonder why I'm listening to you about payments. So let's start down this end. Do you want to mention to the audience who you are and why you're interested in payments at all?
Sure. So my name is Amit Kurseja, and I manage acceptance of Amazon Pay in India. So the fact that I'm here is because I just wanted to bring in the Indian perspective of what is going on in that ecosystem. And personally, I'm interested in learning what is going on here. So I've already learned a lot since morning, but whatever I can share and professionals here can use from that learning would be the objective.
That's great, thank you. And we're doing a trade deal later on, right? So just don't forget that, please. Paul.
Good morning. So Paul Adams, I'm International Payments Director at Barclaycard. I'm one of those boring acquirers from yesteryear, Dave. So I'm pleased to be part of the panel.
You can't remember those days.
No, we're helping our clients, respond to some of the complexities that the market faces at the moment in terms of, regulation, new ways to pay, new ways to interact. So keen to be involved in the dialogue.
Daria.
My name's Daria Rippingale. I'm the CEO of Bankingblocks, and so we're a wholesale banking provider for the fintech and payment space. So we work very heavily with the companies that are facing the challenges of many of the regulations right now, and I'm very interested in this space.
Okay.
Rahul Panam, I'm the VP of Risk Strategy at PayPal. I spent the last 4 years of my life building Simility as a CEO co-founder. And then we got acquired by PayPal July of last year, so at PayPal right now.
Great stuff. And PayPal is a payments thing or what?
Yeah.
Yeah, Marcus Brinkmeyer. Hi, nice to be here today. I'm responsible for the UK market of UnionPay International. For those who don't know UnionPay, it is the card scheme that is not wondering where will the disruption be coming from, but we are facing it every day in our home market.
Great stuff. Thanks for joining us, guys. Now, we wanted to have a discussion about the big trends because we wanted to kick the conference off by highlighting to people in the audience what the big trends are in this space. And so I wanted to first of all test your reaction to one or two of the things that we're obsessed with at the moment in here. And I wanted to start in an odd place. Actually. I wanted to start with the whole kind of open banking PSD2 thing. And the reason I wanted to start with that is because I'm not sure if people have taken on board quite how disruptive a change this is going to be. I had a sense last year people thought PSD2, it's something to do with APIs, it's something for the IT department to sort out. It's not, and I think now people are beginning to, so to me that seems to be one of the biggest trends. So would anyone like to reflect on open banking at all? Is that a...
So,
okay. All right, let's move on to something else.
I can, yeah. Look, I think in terms of open banking, you're right. Everyone's been talking about APIs and AIS and PASPs for the past few years. But I think one of the biggest changes it's going to have in actually shifting the mind space of banks in the modern world. Banks have traditionally cared much more about their stakeholders and their profit margins. And what open banking's doing is it's finally saying to consumers, you are now in control. You have the right to demand what you need, and you have the right to move if you want to. So I think that one of the biggest changes and trends is it's going to be taking banking away from just being a profit margin business and forcing them back into actually caring about their consumers, creating products and services that are focused and targeted against them in order to not lose the market to the fintech players.
Paul, have you seen the starts of disruption in this space yet?
Indeed, indeed. So from an open banking perspective, which in itself is potentially a bit of an oxymoron, who wants their bank to be open? We're seeing a real shift in terms of new players. We're seeing new business models. We ourselves have launched aggregation functions, which is starting to really make that data useful and powerful to the consumer. I think as we transition through this year, the evolution into providing new payment tools will be key, and putting control both in the consumer's hands but also in the merchant's hands to provide new and alternative both ways to pay, but the bolt-on value adds that you can attach to those ways to pay that may be brought about through the frameworks that open banking and PSD do bring.
But who's going to benefit from this open banking tradition? Who's going to make out from this?
So I think consumers mostly. See, the outside-in view that I see is that the innovation was not there in terms of customer experiences that could be developed. So this will open it up for private players, fintech players to build good experiences for customers, and they can leverage and really help scale the ecosystem when it comes to digital payments, and specifically the success that we've seen is in the area of person-to-person transfer or really small micro payments to merchants. So those are the areas where fintechs have really helped scale the numbers in India with the advent of open banking. We never called it open banking. It was done as part of opening up the instant payments initiative, where third-party apps can also participate and allow customers to do transfers. And Amazon is one of the participants. There is Google. There are more, and the numbers have really scaled what we have seen. Because
just to clarify, so is anybody allowed to use the UPI, or do you have to have a banking license or a payment banking license?
Anybody. So you don't really need to have a license. You have to register as a PI, but that's like a very small thing to do. Yeah, it's not really a license.
So, but for less sophisticated markets that don't have this kind of infrastructure yet, Germany, for example, how big a change was it when you went over to UPI? Do you see, and in China as well, do you see 1,000 fintechs, or do you see basically, and I don't want to put too fine a point on it, you basically see Amazon and UnionPay and big players like that coming in and taking advantage of it?
No, even small players will be, so it all depends on how good experience you build.
I think it is really giving the chance to companies that don't really until now did have access to this kind of infrastructure, because what the banking industry and what the card schemes have done over the last decades is really building up an infrastructure that allows you to shift money across borders, right? And this USP is going away because it is being made accessible to everybody. So every company who's having a strong customer base will be able to leverage on this infrastructure and will be able to offer services and to compete with the banks and with the schemes.
But am I right in thinking that for the incumbents, and this has certainly been the experience in China, I know the figures reasonably well, the loss of transaction fees from banks to the challenger fintechs has been hundreds of millions of dollars. I mean, it's a very significant amount. But the problem for the incumbents isn't the loss of fees, because most people in this room would have planned for transaction fees asymptotic to zero over time. It's the loss of the data that's turned out to be the sort of... So what open banking is about giving up data, and we have to have strategies to deal with that, don't we?
Yeah, so I mean, if you're looking at, to your point, the players who can, join the sort of banking folks in the open banking revolution, right? You have your usual suspects, right? Like Facebook, Amazon, Google, PayPal, who have tons of digital customers, and they can come in. And of course, we have seen in the past, whenever there's a disruptive trend, completely sort of new players come into the market. To your point about data, I think the core, I think what, and again, this is a hypothesis in the future, but the core capability of managing the data, managing the risk, controlling the infrastructure, still resides with the banks, right? And if I'm sitting as a bank, I'd be like, hey, if I can work with this ecosystem, right, consider like I'm Apple, right? And I have now an app store, and all these are apps in my app store. But I am the ecosystem that can drive innovation, and I have all this data. And the fundamental fact is you still need to control risk. You need to know who to allow access. You need to know what is the sort of right credit rating for folks, who's fraudulent, who needs to be authenticated. All of that will be something that the banks can control. So I think it has to be looked at as an opportunity versus a disruption that will sort of make you not a part of the value chain.
So, but do we see it? So things like open banking, PSD2, SCA, all these kind of things. I mean, I guess we tend to think of them in terms of we have this business model, we have this value chain. How are we going to change it to deal with these pressures? Whereas what I'm starting to wonder is if those pressures aren't more tectonic, if you know what I mean, in the same way that PayPal came along. I mean, you could think of PayPal probably as the first fintech, really. I mean, that's not an unreasonable description. It came along and changed things. Are we on the cusp again where we're thinking, oh, well, we have this, we're going to deal with these. But actually, what's really going to happen is other people are going to come along and disrupt us because we're not disrupting ourselves. I guess that's what I'm pushing you on, really, Paul.
Yeah, I think we have an obligation to ourselves to respond to this new set of rules, and this regulation is a framework. It's a rules of the road. If we don't, adapt and change our model and work with partners to respond, then absolutely we will be disintermediated. But our role as an acquirer, is very much to offer, the same objectives, the same services to customers. Linking buyer to seller, making the transaction as seamless as possible. There's lots of new ways created to do that, but the fundamental principles of that role doesn't change, and therefore it's key that we take on board these moving dynamics and work with partners and merchants and consumers alike to make sure that we absolutely stay relevant and not only keep up but continue to outpace.
Okay, let me ask just one more question about this then, because I want to make a point about, the audience probably will have noticed that because of MPE's commitment to diversity, we have someone on the panel who, so Daria, most people will have noticed that you are...
A lady.
Oh, no, I was going to say Australian.
Oh. G'day.
And the reason I'm saying that is because I'm particularly the Australian approach to open banking. Yeah. Very different from the European one, because the Australians have taken a look at what's going on here and said, hold on a second, because open banking forces the banks to open up their data and give it to people like Amazon and Facebook and UnionPay and everybody else, we have a highly asymmetric competitive environment. Mm-hmm. Right? So for many of the people in the audience, the competition isn't these little fintechs that are springing up. In Australia, they've gone down a slightly different route and said we're going to base it on these kind of consumer data rights. So the banks will have to open up, but only to people that have to open up themselves. And have you had any time to sort of reflect on, I don't know, I mean, in hindsight, maybe the Australian approach is slightly better than ours?
I think the Australian approach to many things is better than the European approach by nature. No. Look, I think the Australian Open Banking Initiative is kind of a combination of the best of both worlds from PSD2 and GDPR. That's how I look at it. And, in Australia, we only really have, 4 to 5 majors that actually have any part of the market. So I think that they're taking an approach which is actually going to probably drive better services for consumers, because it's not just open for everyone. And it means that you're not going to have a massive flood of every kind of retailer, marketplace, fintech in the market competing to offer the same service. But you're actually just going to have the groups that are specifically focused on delivering that and who manage consumer payment, consumer rights, and consumer products, really investing specifically into that rather than competing against so many different players to be the hottest new thing or offer the most services available.
So if I push you guys a little harder on what this means specifically in payments, I've been looking at forecasts that say in the Western European market, we could be looking at possibly something like 1/3 of the card volume going away to open banking, direct to account, PSD2 kind of stuff. How do you, I mean, is that scaremongering, project fear, or is that kind of roughly the sort of working figure these people should be looking at?
So I can tell you from India example that we have seen that overall numbers have increased from payments perspective. So we did not see a dip in the traditional bank transfers or the card schemes and rest of the stuff. We saw that it was an addition in the customers who were doing cash transactions at that point in time. But one of the things it coincided with was real-time transfers. So that was a real benefit that merchants saw that, this is the time I should move from cash to digital payments because I'm going to get the value immediately. And it came with the third parties and fintechs promoting this whole use case. So I think coupled with few such initiatives, it will be only additive and it should not take business away from rest of the players. That's my view.
So you're optimistic that people here can survive?
I tend to agree. I think seeing to get to such significant shift in consumer behaviour, we in our industry we've found challenging. The uptake of new payment types, new payment methods have been difficult in part. But if you think about as you say, driving something new. What does a customer get in return? And if that is that digital in an instant, is that access to information? Is it some benefits delivered through the merchant environment or beyond? Those types of incentives to move consumers from one payment method to another are really going to shift the needle. But it's difficult to say 30%.
But it's just a shift in the way payments are being made. There's going to be an increase in payments. It'll just be a reduction in card payments. So there's actually a lot of cost savings for the whole banking industry in that when you remove card production, reissuance, print fees and everything. So it's just going to be shifting the model of how people are paying. It's not going to be reducing the number of payments. And
I don't think it'll reduce the number of payments, but if we look at, UnionPay is still the biggest debit issuer in the world by far, right?
Yes.
But you, as you said at the beginning, you've already had to face this competition head on. So what proportion of your market has gone away from cards to?
Well, what we currently see is that mobile payments, which equals to our competition, is probably around 25% of the market if it comes to non-cash transactions in China. Yeah. So that is what we're seeing currently. And we see that card business is still growing. But we also see that mobile payments is growing, and admittedly, they're going faster.
So the lesson from emerging markets, India, China, Australia, is that it's additive in that the number of payments goes up, but we have to be prepared to see a chunk of the card business.
Absolutely, absolutely. I think we will lose, if it comes to payments, we will lose to new competition.
Yeah.
At the same time, these new providers will also be able to tap into a market that hasn't been there until now, be it cash payments, or just be people who said, well, card payments don't work for me for whatever reason. Maybe because they're too young and say, I want to do everything with my mobile, and as long as cards cannot do that, I'm not interested.
But in markets where cash dominates, like India, for example, or Germany, the opportunity to attack cash is no longer through cards, it's through these alternative mechanisms, the phone and so on. Okay, I understand that. So that takes me into the next kind of area of big trends, which is like on the technology side. So I tend to assume that the key technology for the next 3 to 5 years is still the mobile phone, it's still the smartphone. We heard earlier on about adding passive biometrics and all this sort of thing. But other people are saying, well, we could be going to Internet of Things, we could be going to ambience and like the Amazon shop where you just walk in and walk out again. So what are your feelings about technology? Am I too old and conservative and focused on the smartphone, or do they still have some life in them?
They still have life.
Smartphones, so like iPhones and things. That's what I meant. Yeah. So. Someone.
My sense is we still haven't quite tapped the potential of the sort of post-iPhone era in terms of omni-channel, the different device form factors and so on. So there's still a long way to go in that before we move on to things like IoT and so on and so forth. Especially when you look at the amount of data we have and the early stages of AI, ML that we are at, there is still a lot to be sort of gained from iterating on the current technologies and stacks and devices before there's sort of a disruptive change. But that's just me. Maybe I'm too traditional right now, but that's how I see it.
I think there's less friction as well in mobiles than the Internet of Things and wearables and all these devices. You know, we can all have a ring that works as a card not present, EMV, but everybody has a phone regardless of that. I'm not going to leave my phone at home today because I'm wearing my special contactless ring. So I think considering the convenience, the laziness of people, it makes sense to move from cards to mobile because we're going to have both today or one. But I think that mobiles will continue and be the primary technology as we move ahead.
Do you think, going back to what Rigo said in the very first presentation, do you think that SCA, 2FA, PSD2, this is actually driving us onto the phone? Mm-hmm. So it doesn't matter whether you're on the internet, you're in the shop, you're phoning, it doesn't matter. You'll end up doing the transactions on the phone.
And there's more authentication as well. You've got biometrics, you've got fingerprints, all of these types of things. You can do instant SMS verification, email, all in one place. None of these other technologies actually give you that as a sole provision to move ahead and do a payment, whereas your mobile, it does absolutely everything for you in one. So I think because of that, it will always be the key driver for at least the next 10 years.
But what are the other technologies that we should be looking at over the coming couple of years?
I think the potential of mobile is itself not explored fully yet.
Right.
It still has to, as she said, that there are a lot of functionalities that are there that can be leveraged, for example, biometrics and other things. I think PIN on software could be a big disruptor where every mobile phone can become a device in itself. So in mobile, I would look forward to that transformation whenever that happens. Beyond that, I think Amazon Go, voice shopping, and there are a lot of such technologies that are coming up. But there is time to really see big-time adoption in those technologies.
I'm on
so we have two extremes, right? You can say that my mobile phone is going to be my identity, and I use my fingerprint and I use the device ID and all of that to sort of validate, and that means you're driving people towards mobile adoption. On the other extreme, you can say, well, I have 3 iPads and Alexa, I have Google Home, I have Fitbit. And which means we have to live in this sort of multi-device world where I'm not tied to one device. I think right now the focus is on like you having this sort of one personal device that can be used to identify you, and it's very personal, right? So and the other extreme is like 15 devices that I can use interchangeably, and they can do transactions on my behalf. So unless we completely shift from this paradigm, which SCA and everything is attached to one device, I don't think we're going to see that change quite a bit. And I think this is where we're moving right now, right? Everything is authenticated using mobile. And so it's sort of too disruptive for me to think what this world looks like.
But how far away realistically are we from the kind of alternate? Sorry, it was nothing personal. There's only 10 minutes left and I couldn't see the clock from where I was sitting there. I don't want to run over. So. But how far away from that technological alternative are we where I walk into the store, facial recognition picks me up, discovers that I'm on the loyalty database, I get the special offers sent to me, maybe lights in the floor tell me where to go, I pick this. Like, how far away are we from that wholly technological alternative?
I think it really depends on how much we are willing to invest into this new kind of infrastructure. If you see why the adoption of the mobile devices has been as quickly as it probably has been, then I think one of the reasons is, or the main reason is, that it was relatively close to what we had in card payments with NFC. So from introducing or including NFC in a mobile device is obviously pretty simple to be done. If we're now talking about biometrics and we are scanning our fingerprints, and my argument would be, why do I have to wear a ring if I have my finger with me? However, how quickly will we see that? I think we will need a completely new infrastructure. And we are not talking about one market like Germany or like Europe. It really would have to work worldwide, right? Because otherwise, the whole idea of payments as we know it today, of making it borderless and being able to pay wherever I go, would pretty much be lost. And I don't think that customers would appreciate that very much.
But you can see that the attraction to merchants of that alternative, which is that, because the problem with the payment mechanisms we have now is that when I go into the store to buy something, the merchant doesn't know who I am until I get to the checkout.
Yeah.
So all of the opportunities for value-added services don't come until I've finished shopping.
Yeah.
You know, whereas if the merchant knows who I am when I walk in, it's a completely different business model where all of the value-added services become sort of plausible. Now, so I'm just wondering if the sort of business model isn't sort of pushing us towards that a little quicker than you would think from the.
I think the technologies all exist. It's around knitting them together and what problem are we looking to solve as an industry? Are we looking to capture data on consumers to make the offering to those consumers more relevant? Are we looking at stripping out cost? Are we looking to seamlessly engineer the consumer journey through the particular service or retail journey that particular consumer is going through? So I think we've seen examples where individual merchants or sectors can fundamentally shift or change behaviour, and I think it's those particular use cases will inevitably snowball, and we'll see one or two of them really grab traction, and from there we'll see giant leaps and shifts. But again, I think my message is the technologies are there. It's how do we knit together an ecosystem to make them work at scale. And back to the point around mobile, in most of those technologies, mobile will be the center point. It might not be the point that makes the transaction, but it's the center point that the consumer will come back to register, to authenticate, to interact, to set preferences.
So it's the enabler for the.
It's the enabler for the remainder.
Let's move on to trends on the business model side for the last few minutes. So given this kind of regulatory envelope and given the sort of technology drivers which are pushing us in certain directions, the sort of between those two we have the new business models emerging. And I thought I'd be specific in the question rather than sort of generally waffle around the topic like a management consultant or something. So if I talk specifically about the example of Deutsche Bank and IATA, which I think is one of the more interesting examples. So here you see a kind of vertical, sector-specific play to go direct to the account, to learn all. And I know Barclaycard have launched Pay by Bank in the UK yesterday, wasn't it?
Indeed.
But nevertheless, this idea that coalitions of merchants or sector-specific plays could step in, take advantage of the new regulation, take advantage of the new technology, and create these wholly new business models. That's really here right now, isn't it? Or again, is this just am I picking on just the one-off case?
Absolutely. I mean, it is here. I think, again, there are some fundamentals around those business models that will shift. The liability framework, as an example. Consumer rights. If you think about the regulation, many of us potentially see it as a burden, but actually, what the regulation set out to do is provide consumer protection, reduce fraud, increase transparency, etc. These functions continue to enable that, but what we haven't seen yet is the potential of some of them to go wrong. Right, so what's the downside of these new models and who is liable and what are the implications to consumers and other parties in that chain?
You mean like if an airline goes bankrupt? So that could never happen. When's that ever happened? Oh yeah, yesterday. I forgot.
So
come on, PayPal must be experimenting with new business.
So here's the thing, right? Like I think just a couple of trends. One, when we operated in a cloud world, right, we tended to consolidate data in sort of one location, one data center, and sort of draw trends from that. Now, as regulations push us away, where in Europe you have to maintain the data in Europe, India is moving towards not letting consumer data leave India, and so on in China. That just changes the whole way we have thought about database infrastructure, right? Secondly, if you look at strong customer authentication, right, we have wanted to move towards a frictionless experience, passive biometrics, and so on. But now strong customer authentication sort of pulls you back. So I think there's a lot of business models, but they're essentially helping solve for regulations versus like, solving a different fundamental business problem, because there are so many of these fundamental changes that have happened from a regulatory standpoint that we need to sort of bake that into the next sort of iteration of business models.
But that kind of thing must inevitably mean a big change in the business model, because a lot of the business model as it stands now is to do with identifying the participants in the transaction, managing the fraud and uncertainty around that. If you have strong authentication, if you have the mobile phones, if you have the biometrics, to paraphrase Bill Gates, if you know who everybody is, payments are quite easy, right? It's just mucking about with a spreadsheet somewhere. So what we see as these disparate trends, when you begin to see them coming together, must cause significant disruption in business model. Aren't we falling into the trap of looking at sort of marginal changes?
Business models in banking are changing significantly. Everyone's moving to marketplace banking because there's no margins there anymore on the transactional side. So that's what everybody's talking about. It's the new sexy buzzword. But the reality is that business models are moving to suit consumer needs rather than corporate needs. And that is the big change that we're seeing. So banks are having to add new products and services that they traditionally wouldn't rely on. Consumers and fintechs targeting consumers and now focusing on capturing that audience. So it actually becomes more about all the other added values around banking services that people might want, whether that's personal concierge services built into your mobile app, whether it's instant insurance when you get on a plane because it's fully connected and knows where you're going. It's all these other things that banks are now or fintechs trying to focus on because the business models change. So it's all about stickiness. How do you get stickiness when everybody can go anywhere and no one's making any money off you?
So for the people in the audience who are thinking about their strategies over the next year or two, what kind of areas should they be looking at the intersection of the trends that we've just been talking about? Where are the really new opportunities, do you think?
Well, I think what we've seen in one of the presentations before was how important data actually is about the merchant and also about the consumer. And the new regulation is giving pretty much everybody the chance to break in, or every company to break into this market, and to take the data, so to take what is really valuable about payments, to take that and build it into your own business model. So I guess it's stating the obvious, but I think this is the problem with the disruption for the established players, because right now it were the players who knew exactly who is buying where. And I don't think that you can find any other example that is showing so much about an individual than where they shop, what they shop, how often they shop, and so on.
All right, let me ask Paul that question in a more direct way. So Paul, do you lay awake at night worrying more about little fintechs or Amazon Pay?
So I think we look at working with fintechs. We look at making sure that our kind of propositions are relevant. There are new large players such as Amazon and others that are operating in the payment space, but we're looking at business models that, as you say, go beyond payment themselves, right? That's our bread and butter. That's our fundamental right to do business, if you like, ensuring that the payment is secure, trusted, reliable, and that our platforms are resilient. Beyond that, we all have different strategies to ensure that we're engaging with consumers and merchants, and that can be working, in partnership or in competition.
That's Amazon Pay then. So, and now let me be naughty and ask you the same question. So, is it the little fintechs that are springing up all over the place that worry PayPal, or is it Facebook?
So I would look at the opportunity, right? So if I look at the underbanked and unbanked, right? Traditionally, whether it's PayPal or the banks like Barclays, you have turned away from people who you're unable to adjudicate a credit risk, right? And say, I just don't have enough data. Well, if you're so smart about data, you should figure out how to collect that data and make a decision, right?
Facebook already have.
Apparently not enough, because they're not loaning money to people who don't get a loan in a traditional financial system, right? So 80-90% of the people are not a part of the traditional banking financial system all over the world. And same with cash, right? Like, if I go to India today or China, I can scan a QR code and make a payment to a vegetable vendor who used to use cash before. So there's so much opportunity in things that are not a part of this whole ecosystem that if we focus on that, there's a lot more to do than sort of the incremental innovations that we could do with, with either mobile or multi-factor or data or so on and so forth.
Thank you very much. So big trends that mean big changes. but serious opportunities for everybody. Look, I hope you'll join me in thanking these guys, because you're listening to real experts and you're getting their real opinions, not some marketing scripted nonsense, because they genuinely didn't know what questions they were going to be asked, and they gave you honest, informed answers, which I really appreciate. Please join me in thanking them.
Thank you.
1 second.